Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the 920 EMA Trading Workshop. Today, we're going to go over the 920 strategy. We're also going to cover some news. We're going to have to start on the news front because that really is what's important right now. The strategies will always be there. We're going to go ahead and we're going to cover what's moving and shaking right away, and then I'm going to dive right into the 920, and we're going to look at some U.S. equities. Also, we're going to look at gold. I think the WTI crude oil's got to be ripe for a 920 trade. Again, just getting absolutely lambasted. We've seen a lot happen in the last 24 hours, 36 hours. We've seen a tremendous amount yesterday. The big question that everybody was wondering was, were we going to see escalation? And we covered it live. There was missile attacks on U.S. installations in Qatar. Those looked to be largely symbolic, and we had a ceasefire that was signed last night, agreed to. That ceasefire has already been broken. We saw Trump give a news conference a little bit earlier today. He was answering questions, dropping F-bombs. He was in rare form. This is a highly tense situation. Everybody's angry right now. And right now you've got the U.S. envoy going in to Europe, and they're going to have a nice summit there with NATO, and everybody's going to try to figure out what's going to happen. I will tell you right now that the United States is not happy. Trump is not happy, and something's going to give at this meeting. So we're watching very closely. We've got positive sentiment today. Let's get you right out to price action here. Dollar CAD. This was sort of a trade idea that I put out earlier today. I'm really looking to sell this thing right up into here. And the reason why I think that we're potentially going to get a reversal here in this dollar CAD is because oil is absolutely getting lambasted. It's off about another 6%. We're trading about 64.28. That's a huge deal, an absolute monstrous deal that we're watching in WTI crude. An absolute plunge from a weekly open that was right around $78. Since then, we've got a major reversal, and that reversal is all on the back of peace. Now, I've told the story several times, and I'll tell it here again in a second, but when you're trading huge events like this, global geopolitics, when you're trading at this level, you've got to be aware of what's happening with the news, and you have to be ready for the risk that you may or may not understand you're taking. I haven't placed a trade yet this week. I got one on the board right now, late day WTI crude. I got a support level that I'm going to scalp, but right now I am waiting. I'm in a wait and see pattern because this ceasefire is very, very fragile. It's very delicate. But right now, I am looking at the dollar CAD selling right up there from 138, probably about 138 and a quarter. That's a pretty darn good level. If you missed the trade idea, be sure to check out our analytics thread inside of How to Trade, or you just click on me, follow me at How to Trade, and that'll get beamed out to your email inbox automatically. You'll never miss an idea. I love the sell up here. I think it's a fantastic opportunity for us potentially to get in on a short-term play back to the bear. It's tough for me to see WTI crude stand this week, but it is absolutely getting destroyed. So good to see everybody back in the room. We got a full house today, so definitely welcome, Tardis. Good to see you, Tardis. Yes, sir. Always a pleasure. Tardis asks, do you offer trading classes? And as of right now, the one-on-ones with the clientele have been suspended, and one of the reasons why is I'm the only trading analyst and coach here at How to Trade. When we were doing the one-on-ones, we had 3 of us. There was plenty of us, so we could meet with a lot of you, and we certainly did that. As of right now, those are being suspended, but those may be brought back. Those may be brought back later this fall. It really just depends on, what the workload looks like and what exactly we're going to try to get accomplished in the next few quarters of 2025. Moto FX, good to see you, Moto FX. What is the duration of this session? I'm going to go probably for about 30 or 40 minutes. We're going to get in there. I'm going to show you exactly how to trade the 920, but I've got to break down this other geopolitical stuff as well. It's very important. I know a lot of you are trying to figure out what to do with your trades, and we need to tell you exactly what you need to be ready for. Queen B, good to see you. Queen B Roadblocks, hello again, and nice to see you. Always a pleasure, Queen. Everybody here is welcome. Fanto Jr., nice right back at you. Lita, always a pleasure, Lita. Thanks for joining me again today. Tuku in the house. All right, good to see you, Tuku. Welcome. Dave F19, always a pleasure. Dave, I am excited about the trading week that's coming our way. I am not overly excited about today, though. So if you're making money, that's fantastic. Sometimes I get into the market and I say, maybe I don't want to trade it. Maybe I do. These ranges are huge. I'm typically a range trader. I love attacking intraday ranges. And when I see the ranges for gold and crude oil that were already made during the overnight, I'm not really overly excited about it. But there is one level in U.S. oil that I'm looking at relatively closely. And let's just go ahead and give it to you here before we get on with it. You can see right here, this is a big time zone right there. Spike low, spike high. Weekly chart for U.S. oil, pullback right around 63.75. And you can see today's lows right around 64. So I will be watching 63.75 closely as a potential buying opportunity. But listen, you are not holding longs. You cannot afford to hold longs in WTI. You cannot buy crude oil and hope you catch the bottom of this. Don't be that person. Don't be that guy. Don't be that gal. Don't be that trader. Traders lose money in many different ways. Fighting trends is the number one way that traders lose money. Do not fight a trend. This daily trend, this sell-off, I mean, just pull up a 30-minute chart and you'll see exactly what time it is. This has been an absolute crash. It's been an absolute crash since the open. Bang, and we just sold off, and then we really started running on Monday there. And then today, what happened? Well, we're still sort of meandering around, but we're coming off. So be very, very careful if you're going to take a long. Remember, it's okay to trade against trends. Just have a stop loss and be sure you bail out and you do it in a timely fashion, or else you're not just going to get hurt bad. You're going to get hurt permanent. Be very careful with what you're doing today. Okay, now remember, if you want to trade anything that we talk about today, you can definitely check out switchmarkets.com. Bring your ambition into focus and see if you can't make a few bucks from the volatility. Right now, I'm excited for tomorrow. I'm not really overly excited for today. Stocks are up. Commodities are down. That means that everybody's betting on peace. We're going to find out more, but that ceasefire is really what it's all about. And this ceasefire that was announced last night from the Trump administration, you've got Iran-Israel conflict. Trump just went after everybody this morning, was very, very upset with Israel, was very, very upset with Iran. He believed they had a ceasefire. Now, they don't have a ceasefire. I mean, right now it's tentative. People are saying, okay, we're done shooting missiles for now. The missiles are still flying. The big NATO summit is coming our way here. I believe in the coming hours. You've got a lot going on here. Do not overestimate the opportunity or the chance of this ceasefire being blown to bits in the coming hours. Blast shake Tehran after furious Trump tells Israel to stop strikes. This was a heated situation this morning. I won't repeat the president's language, but he was heated. He was dropping F-bombs on him, and I was surprised. I don't think I've ever seen a U.S. president address the media in such blunt terms. But this situation here, anything can happen. I don't know what's coming next. I don't think anybody does. But just remember, everything that happens is going to drive a tremendous amount of volatility to the market. So if you do, in fact, or if you're watching your news feed today, Jerome Powell is the other item that was interesting here. He was sort of shaking up the U.S. dollar. Right now, the dollar's off about 0.5%. Really just an ugly type of a situation for the USD. Take a good look at price action, and you can see that we're just coming off dramatically. There's really no end in sight. There's no way for us to pick a bottom in the USD because it's just on the ropes. It's getting clobbered every single day out there, and you can see that this monthly trend right here, there it is. That was January. That was when they swore Trump in. Since then, it's just been an absolute yard sale out of the U.S. dollar. Today was no different. A lot really going on here with Jay Powell's statement. He said Powell emphasizes the Fed's obligation to prevent the ongoing inflation problem despite Trump criticism. Well, basically what Powell said is he said the tariffs are playing hell on their policy. He says, we don't really know what to do because of the tariffs. They're an X factor. We don't know how to handle it. Okay, that's great. So long story short, is inflation going anywhere? No, it's not. I was speaking with a trader in the room earlier today, veteran trader, gentleman knows his stuff, and just basically said, yeah, I'm watching Jay Powell speak. He's talking about tariffs. And I said, listen, one thing Jerome Powell is incredibly good at doing, he's incredibly good at passing the buck. Supply chain, COVID, tariffs, whatever. The truth is, the inflation is entrenched. That means it's not going anywhere. So we're going to keep a close eye on Jay Powell. He testifies again tomorrow. Be ready for that. Be ready for that. It's going to potentially be a market mover. But as far as our DXY goes and our dollar, there just really isn't any way for me to try to call a bottom for you here. If I was going to work like a long-term macro wave, I probably would go right from that spike low all the way up to that spike high, and then you'd be looking at really key levels from here. 99 was a big one. We talked about that last week, and the DXY is broken beneath that, and I have to tell you that I think we're going to 94. I just don't see any strength for the USD. I think that if we get that loony trade, if we get a bounce out of the dollar CAD, then we have a chance. Then we have a chance to trade. All right, let me see. Urian, can you please tell us your Bollinger Band deviation setting? You spoke about it yesterday. Yeah, my Bollinger Bands are relatively simple. We're going to talk 920 here beginning in just a second, but my Bollinger Bands, what we're going to do is we're going to set a periodicity. Let's just show you. I mean, this is all public domain stuff. These are my own personal settings, though. I'm going to share them with you because I'm pretty much an open book here. Length is 24, so you're going to want a 24 deviation, or excuse me, a periodicity of 24. We're going to base that on the EMA, so these are exponential Bollinger Bands. The source is going to be the high-low divided by 2. That's the midpoint of the pricing bar. The standard deviation is 1.9, and those are my own personal settings that I use. I learned those when I first started, and I haven't questioned them since. You can use any settings you want on the Bollinger Bands. any that you want. What you have to do is get used to the settings and understand how they function on price. I know with the duration that's as long as 24, I've got a good opportunity to see really the baseline, what price is doing over a long period, and not get head faked out by just sudden price moves. So I hope that helps. Let me see, Eli. Good to see you, Eli. Welcome back. Ironically, the DXY level is at the same level as Trump's last term. No kidding. Right in here. That's a good observation, Eli. Can't believe I missed it. Well done. Well done, guys. Fantastic. Take a look at it. Look at that. COVID craziness. And that's where the dollar index is. COVID craziness. Fantastic stuff. Great observation. Great observation. Do we get a bump out of the USD or not? I don't know. I don't think so. Quick news, quick around the horn here with our economic events. I'm not going to spend much time on them because this week, this calendar does not matter. It's all about geopolitics. It's all about war, and has nothing. The CB consumer confidence came in at 93. We were forecasting 99, and it was down. That's bad. That's a bad reading. It does not matter. Jay Powell's testimony just really doesn't matter either. Unless he says we're going to cut interest rates imminently, it just doesn't matter. So, what do we have? What's our hierarchy of market drivers this week? It's going to be war, 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 and war. That's it. That's what's driving the markets. That's what we need to be watching as active traders. Okay. So how do we trade the action, guys? I already sort of went through, got us all up to speed on what's going on with our news cycle. For right this minute, we need a strategy. Now, there's a million strategies out there. This is our How to Trade Com YouTube channel. We've got a few subscribers. It's a small family. We got quite a few videos out here, though. And most of these are strategies. Most of these are strategy. We put one out on the S&P 500, not getting really many views, but that's okay. I mean, there's a million choices out there. What we want to do, though, is today we want to focus on a strategy that's pretty darn good for trading volatility, and that's going to be your 920 EMA crossover. And you can see there's a million strategies up here. This one's one of our more popular strategies. This is one that a lot of people really like. I really like this, and we're going to trade it in a couple of different ways today. There's your 920 EMA. You just go check the video out. It's 11 minutes. We show you exactly how to trade it, and we got a lot of great interest on that video really over the past, I don't know, several months. So what is the 920? It's very simple, guys. A 920 EMA crossover develops when the 9 crosses over the 20, we buy the market. When the 9 crosses under the 20, we sell the market. Now, what we're going to do today is we're going to trade it on intraday time frames, and we're going to use the relative strength index as being the confirming indicator. Now, most of you that have seen a few of my streams, and you're probably tired of me using the RSI as confirmation. In my opinion, the RSI is about as good a confirming device as you're going to find for a crossover strategy. And there's 2 reasons for it. Number 1, it's really easy. I mean really easy. And number 2, it gives us a good idea of pricing momentum. When do we want to trade? When price is out of when it's in disequilibrium, when it's out of whack, when it's not establishing an area of fair value. We want to sell when it's overbought, and we want to buy when it's oversold. The RSI gives us a good idea of when to do that. Now, the 920 crossover is the missing piece. I know many traders that trade the RSI religiously, and eventually they run into a trend that just eats them up. They're selling when the market's overbought up above 70, and the trend just keeps going, and they lose a fortune. So the thing about the RSI is, yes, it can be a great indicator, but it's more for confirmation. If you tried to trade it what I call naked or in isolation, you're going to run into trouble. The reason why is when price does break out of that RSI band between 70 and 30, that means it's trending, and you're basically lining up to trade against trends. And I have to tell you, that's a suicide mission for an active trader. You run into trouble, and you're going to run into trouble fast. So be very, very careful if you're just trading RSI. I'm going to show you how to use RSI with the 920 today, and we're going to go ahead and trade it. All right, guys. That's about all there is to it. All right, let's do it. Let's run through some trades. This was a fantastic one. This was NVIDIA stock. Now, the first thing I always get asked on these workshops, and inevitably I'll get it private messages, and we'll get it in the comments below, what time frames are you using? We are going to be using very tight intraday time frames when we look at the US 30 and also gold. All right? But let's say we're trading a stock. A daily time frame without confirmation is pretty darn good. You can just trade the 920 crossover on the daily time frame on individual stocks. And what that means is a share of NVIDIA right there, that was going to be our buy signal, was back on the 1st of May, and we were looking to buy right there our gold candles at 112, right about 113. Remember this framework. This is our coded 920, the 920 strategy. A purple bar means a sell. A gold bar means a buy. Crossover, you get a gold bar. Cross under, you get a purple bar. And then also our trend indicator is the distance between the 9 and the 20 is shaded in. And remember, the greater that shade, the stronger your trend. I love the daily chart on stocks. Now, unfortunately, and I'm just going to shoot you guys straight and tell you the honest to God truth. If you're a stock trader, in order for you to make significant money, the kind of money that you can make trading derivatives like Forex and futures, you're going to have a lot of money. You're just going to have a big stack to be able to trade stocks and really get the type of returns that you need to really survive. Now, what I mean by that is, let's say I wanted to buy in right here, and it was a great trade. You're looking to buy 113s. You're already up to 147. You've gained almost 40% on this trade. Well, 40% is great, but let's say, if I only had a $10,000 account, what did I make? 4,000 on the trade, maybe. It's pretty good. It's not bad for a derivatives market, though. I mean, if you got in like on a CFD down here, holy cow, you made a fortune. But what I'm trying to say is this: you're going to need significant money. What if you only had a $1,000 account? Would it be worth it to hold for 4 weeks or 5 weeks to get your $400 payoff? That's going to be really tough to make a living doing that. So I will say this, and also one last thing. For those of you that are overseas, for those of you that are international, meaning you're outside of the United States, which is most of our audience, and that's great. You guys have a lot of advantages that we don't have here in the States. If you're in the United States, you will get hit with a pattern day trader rule. And that means that if you're trying to make trades every single day and close them out within the same day on an individual stock, you only get a few of those per 5-day period, and then you get labeled a pattern day trader, and then you have to deposit more money. I believe it's 20 or 25,000. I don't know. I've never really done it. I've never been a pattern day trader, so at least on stocks. So that's one thing to think about here in the States. If you're abroad, you probably would be leaning on a CFD market here, which would be absolutely great. That can get you some great trades. This was a beautiful one, guys. I mean, this really was. There was your bid. There was your bid signal. There would have been your out. That would have been your out route right there. That would have been your stop loss right beneath that break, and you really did ride this one to the promised land. So you're risking probably, about $10 a share, and you could have been looking for anywhere 20, 30, or 40 would have paid you. Even 10, that would have paid you off really fast. So a lot going on there with this strategy. I know that most of you want to trade this on intraday time frames, and you want to get in on some live trades. So let's do it. All right, first thing we're going to look at here is the US 30. Now, the first thing we have to realize here is, okay, on an intraday time frame, what would be a good time frame for us to be trading a 920? Now, you'll notice that I have the RSI up there as confirmation. Why? Because we're trading short time frames. And if we're trading short time frames, we need confirmation. And the reason why is we need to make sure that we stay out of choppy markets. Now, we don't have choppy markets today. We have directional markets. The ceasefire, the summit in Europe, NATO getting together. There's a lot of optimism that we're going to see an agreement here between Iran and Israel relatively soon. That's driven U.S. equities not to the moon, but I mean the Dow's up about 500 points right now, which is just a shade over 1%. So if we're trading a 920, what do we want to do? Well, we wanted to buy it, okay, but, we weren't on the air yet. So right there, that's about 8:30 my time. Remember, my time's Mountain Time. I'm up here in Dillon, Montana. I'm in the Mountain Time Zone here in the United States. Eastern Time, that's going to be somewhere right around about 10:30 a.m. So about an hour into the trading day, we got a beautiful buy signal right there. Now, shortly after the open, we got a sell signal. That one would have been probably a loser. If you were going to go short there, you would have lost. But this right here, this is pretty much a premium buy signal, and it got you in on a tremendous move. Now, if we were using RSI to be a confirmation device, the first thing we would have to have before we ever look to make a trade is we've got to have the RSI out of its comfortable envelope. This envelope, this shaded area between this line and this line, the top value is 70, the bottom value is 30. Now, you'll notice on the RSI, I have left all of my settings the same. Wells Wilder Jr. invented the relative strength index back in I believe it was the 1970s or the early 80s. This thing's as old as the hills. I have no desire to get in and tinker with the settings. You feel free. If you want to use a longer duration, a shorter duration, you go right ahead. I'm just going to take Wells Wilder Jr.'s work, and I'm going to use it as a baseline confirmation device. I'm not trying to reinvent the wheel here. I want something that tells me when the market's out of whack. Now, you can use many other things to confirm. If you want to use MACD, you can use MACD. If you want to use stochastics, you can use stochastics. I've heard traders using ATRs, average true range. If you want to use that as being a confirmation device. For me, I use RSI, and it's this simple. Above 70, we're looking to sell the market. Below 70, below 30, we're looking to buy the market. Now, we use our crossovers to sell, and we use them to buy. If the 9 crosses over the 20 while we're in oversold territory, we buy the market. If we see the 9 cross under the 20 while we're in overbought territory, we're going to sell the market. So we've got a 5-minute time frame here on the US 30. This is a pretty good duration. This is a pretty good periodicity to be using, especially when the market's as alive as it is. Boy, say that 5 times fast. I'm moving way too fast. Right now, you can trade a 5-minute chart. The reason why is you've got nice big ranges, you've got a lot of volatility, and right here, we're in overbought territory. We were way above that 70. Okay, we're right up in here, somewhere right around 80. That was this spike high. Now what we're looking for is we're looking for this to cross under. We want to see the 9, which is my red EMA right there. We want the 9 to cross under the 20, and then we're going to go ahead and take the trade. Now, is it beginning to set up? Yes, but it's a ways off. It's probably, it looks to me, if we see a little bit of negative price action, it's probably 3 more bars off. This trade right here, though, is ripe for the taking. Now, if we're using our confirmation device, which I highly recommend on something like a 5-minute, you'll notice there's 2 trades here that we didn't take. Right there. There was your sell. Where were you? The RSI was right around 43. That would have been a no-go. You wouldn't have taken that. What about our beautiful buy that really caught the move, caught the entire market? Well, you'll notice this. We didn't have a buy signal. We weren't beneath 30, so we didn't take it. So you missed both of these trades. Now, you say, Shane, I don't like confirmation. I missed too many trades. Well, then there's something else you can do. You could turn off your RSI. But remember, when you do this, you have to take every trade. You turn off your confirmation. You would have sold right there, and you would have either A, taken a loss above this swing high, or B, you would have just reversed your position on this buy signal. Personally, if I'm going to work short time frames without confirmation, I'm probably just going to do the reversal. I'm going to go ahead with the sell when I get one and the buy when I get one. So technically, I'm pretty much going to be in the market all the time. That's what a lot of you love to do. You love to be in the market. I don't. I love to be in for about 10 seconds, 20 seconds, get what I'm going to get, and then get out. If you're going to trade that way, great. For the sake of argument today, we're going to use the RSI. So right here, you can see this sell is really developing in the US 30. This potentially could give us an opportunity to catch maybe the intraday top of this thing. Overbought territory. All we need is the 9 to cross under the 20, and then we're going to fire our guns and sell it. It's that simple. So if I'm going to do that, how's my trade going to look? Once we get the cross under, we sell the market. Where would my stop loss be? It would be right up there above that swing high. Where would my profit target be? Well, a lot of that's going to depend on where your signal bar closes here, where your trigger bar closes, but you can make it a risk versus reward, a set risk versus reward, or you could build it on market structure. You could be looking at order blocks. A million different ways you can do it. All of them are right. You just have to be consistent with it. So that's a good look at the US 30. Let's go ahead and put a pin in that and see. We're going to come back to that probably in about 5 minutes and see if, in fact, we're going to get our crossover. Let's take a look at something else. Okay, here's gold. Gold, you see the crossovers. There's a cross under back here. Do we have a trade? 5-minute chart, do we have a trade? No, we don't. We're still inside of our RSI, okay? So we don't have a trade on gold. Let's take this thing up to maybe a 30-minute chart. Okay. Do we have a trade potentially on a 30-minute chart? Oh, yeah. Right there, oversold territory. Your RSI was down there right around 22, severely oversold. And now you're looking for a crossover. You're looking for the 9 to cross over the 20, and then you're going to go ahead and take the bid. This is a good approach for day traders. A pure day trader, maybe even a swing trader, would be looking at this 30-minute chart going, okay, I'm going to lock in right beneath that swing low, and then we're going to look to get a bid somewhere up in here and potentially look to maybe take a $25 move on it. Essentially, what you're trying to do is you're trying to pick the bottom of a real heavy trend day. That's problematic in a number of ways, but the technicals are there. You can make that trade. Now, is it the best thing to do? It's expensive. You got to dial your leverage down between 1% and 3%. I'll give you 5%, but that's got to be a small position. especially if you're going to be risking upwards of $25 on the move. So we're watching gold closely here. Sorry, guys, I got way behind on the live chat. Let me see you. Let's see, Daniel. Hey, Shane, it's been a while. I'm doing very well, Daniel. Thank you for asking. You've got any pendulums or W on the go? You know, I haven't done a pendulum strategy or a W strategy. I'm going to have to do one on the Bollinger W strategy. Maybe later this week I'll add a stream and we'll do one on the W. I haven't done that in a long, long time, but I should definitely be doing it. I like the Bollinger W strategy. It's a great way to try to pick bottoms in the market. Let me see, New Credit Life. How can we get your custom indicator? Just head on over to that. I believe I left it in the comment section of that 920 video that's on how to trade comps. So go check out the 920 video. If not, reach out to me and I can send you the script. And it shows you exactly. We actually went through how to code this thing on a video, 920, how to code the 920 crossover strategy using ChatGPT. And I show you exactly how to code it, but I can send you the code. Just reach out. Feel free to send me a private message. Daniel, or do you shorten your length on the RSI? No, I don't shorten anything on the RSI. Leave it. Angelique, good to see you, Angelique. On the How to Trade website, after logging in, where can we send you a message to get the code for a trading view for the 9 EMA? Yeah, go ahead and I think you just click on my picture. Up at the top of the screen, there's two pictures. There's a picture of Connor, and there's a picture of me. Connor went for greener pastures, so he's no longer with us. But just click on my picture, and then hit message, and just go ahead and reach out and tell me who you are, Angeli, and I'll be sure to send you. I can send you the code. No worries. Let me see. Nihar, good to see you. Nihar, hey, mate, I tried the orb strategy on Forex, and it got me funded. Well, there you go. That's fantastic news, Nihar. Welcome. Keep me posted on your progress. I always love to hear traders that are making strides towards their career goals. That's what this is all about. All right. So I'm anxious to trade. I want to execute one of these trades. Typically what I do is I take it down to a real short time frame and we look at something that's extremely volatile, like the E-mini NASDAQ futures. Typically that's what we do. I haven't been able to find it or send a private message. Well, if you want that code, just go ahead and send a message beneath this live stream then in the comments section. If you can't send one there, I think you just click on my picture and hit message. You should be able to send me a PM that way. I know I get a lot of PMs every day. If you can't do that, just leave a comment beneath this live stream once it's published to the How to Trade YouTube channel and just ask, and then I'll just cut and paste the code there. It's not really hard to do. If this is what you want, something like this, you just go right here to your Pine editor, and this has got all the code right here. So it's not overly difficult to do. All right, let's go ahead. I want to trade, though. Let's see if we can get a trade. I haven't placed an actual trade here in quite some time. Remember, these are demo dollars. These aren't real dollars. Here's our US 30 starting to set up. It looks like this trade's going to come to pass probably right after we sign off, and that's usually the way it works. Let's see if we get some action right now. All right. Let's go to trading panel. This 30-minute, though, that's exactly what I would be looking at here. Definitely would be wanting to maybe pick the bottom of this gold market. I think that could be pretty good. All right, let's go ahead. U.S. oil. Let's go to WTI crude oil futures. 30-minute chart. You can see severely in oversold territory back here early session, and now you're still coming off. We're looking for a crossover to try to grab a bottom. Let's take this right down to a 5-minute chart and see where we're at. Interesting. It's sort of an interesting type of a deal here. You had the big sell signal right back there at about 7:15 a.m. my time, 9:15 a.m. Eastern. And then there's your big sell-off, so you caught a hell of a move right there. That's fantastic. And now on this 5-minute, you're starting to get into range and maybe, just maybe, getting an opportunity to trade and pick the bottom, sort of like that gold market. Let's take this down to a 1-minute chart and see if we can do any good here. An incredibly active market. Okay, this would be sort of the opposite. You got into a nice bid right there, but you'll notice that we didn't. Well, you could have maybe bid. You were sort of in oversold territory here, so your swing low would have been somewhere down in there. That would have been a big risk, but you could see that the trade was very, very successful. But right now, we're sort of right there. We popped our head up above that overbought territory, so we're looking for a sell. We want to see a sell, so you're going to need a 9 to cross under the 20 there on this 1-minute chart. To be honest with you, I would be looking at a 5-minute chart to try to get in there and potentially get long because we were in oversold right there. I believe we were just under 30, 29.18. So right there would be probably your trade to the long side. I would be partial, probably taking that, fighting an incredibly steep trend. But remember, a good trade has 3 parts. You've got an entry, you've got a stop loss, and a profit target. And as long as you're mechanical and you assign risk in the proper fashion, then you can take shots at markets like these because even if you lose, Even if you're fighting the trend, and even if you lose, it's still a manageable loss. It's not a catastrophe. And it's when things turn bad, when you run into those catastrophic trades where you lose half of your trading account. That's what we want to try to avoid. That's what we want to try to avoid. Let me see, Daniel, what is your take on the Trump-Powell saga? Yeah, I'll give you a quick wrap-up of that right before we sign off. I want to see if we can execute a trade here, though, before I get going. NASDAQ futures. Okay, something like this. You can see our RSI definitely on a 5-minute chart. We're in sell mode. It looks like we're going to try to sell the top of these equities indices. Interesting type of a detail. Let's see, what else do we have? There was a sell right there, but look, you weren't in overbought or oversold. Did we creep beneath that oversold territory right there? The low is 30.30, so no, we didn't. So we don't have a buy or a sell here on the NASDAQ. Let's take it right down. I love this when we get into this. This is what a lot of people really love, this stuff, 15-second trading. That can be very, very risky, but we do. Do we have a trade here? We're not in overbought or oversold. I don't think that I would be doing it. I don't think I would be buying or selling here. Let's go to the E-mini S&P 500 futures 15-second chart. You can see we're just sort of rotating around. We don't really have a buy or a sell idea yet. Let's go to gold futures, CME gold futures or COMEX gold futures. There would have been a buy signal, but you'll notice our RSI is keeping us out of choppy markets and out of trouble. It just isn't there. It just isn't there. So unfortunately, guys, we're not going to get an opportunity to get in there and maybe take a look at something that can make us a few bucks. All right, let's take a look at a few Forex pairs. Great Britain pound USD, 1-minute chart. Okay, we're severely in overbought territory, so we are looking to sell. So if you're looking at this Great Britain pound USD and you get that cross under the 9 to cross under the 20, you can see our RSI has got us confirmed for a sell. That could be a pretty good one as well. Dollar yen, let's take a look at the dollar yen. Just no trades at all to be had. This is sort of a drag. I was looking forward to making a few trades here. In any case, you were sort of in oversold territory right down there, which was 28.88. Not a bad area. You just got to get that crossover buy there to have an opportunity to trade. All right, guys. Unfortunately, this was a bust. Let's take a look at our US 30 here. 5-minute chart. This looks to me like it's setting up pretty well. We'll just wait and see if we do get that cross under. Looking for the 9 to cross under the 20, and then potentially looking to sell the top of this market. And as far as gold goes, if I'm watching gold and I'm trading the 920, I'm interested in potentially this 30-minute chart, getting that crossover deep into oversold territory, potentially snapping up the bottom of this thing. That could be very lucrative for us. All right, we got some more questions here. More than happy to answer any questions you guys may have. Just go ahead and fire away. Let me see. Daniel, what is your take on Trump-Powell? I'll talk about that in just a second. I got a lot to say on that, actually. Urian, how do you not get confused with too many strategies? Do you have any videos on the plan for the week? Yeah, not this week. We're going to release another video next week, and it's going to be on, I can't even remember what it was on. Something. It was on something. Oh, yeah. It was how to get started with day trading in 2025. I give you some tips on how you can get up and running, just becoming a day trader in 2025. It's a pretty good little video. Get you started if you're a beginner. Then after that, I think we're going to do some work with options. I get a lot of requests to do videos on options. The question is, how do you not get confused with too many strategies? Well, most of these strategies are for the benefit of the audience and the clientele. I understand that not too many people have really grasped my approach to the markets over the years. I've done a lot of these live streams. I know some folks really like the Fibonacci retracements and they love the fractal geometries and all those concepts, but they are a little bit more advanced. And sometimes when we go to something like a 920 with an RSI confirmation, honestly, guys, that's about as easy of a trading strategy as I can put out there. And we've got a lot of interest in it. And unfortunately, a 920 or a crossover strategy, people make mistakes trading crossovers. And the number one mistake that they make is they trade them all day and all night, and they don't understand the difference between a market being flat and dead and active and moving. You've got to have a market that's moving before you can attack it with an EMA crossover strategy. If you do not have a market that's active, I almost guarantee you're going to lose money. And we made a video on it 3 times where you should not use an EMA crossover strategy. Right now, you can use it. You can use it and get away with it. And the reason why is because the markets are active. You've got active equities. You've got active commodities. I mean, when you're getting those crossovers at this point on even something as small as a 5-minute chart, you can do very well, at least during the U.S. session. I think even during the overnight, we're doing pretty well. Maybe back off and go a Forex chart, go to a 4-hour. Go to a 4-hour chart and try to take positions and swing trade it. Those can be successful. What isn't successful is trying to trade the Great Britain pound USD during the dead parts of the trading day on like a 1 or a 5-minute chart. I almost guarantee you're going to lose. You're going to get chopped to death. So you've got to be smart about when you do this. And the other thing about EMA trading is you've got to stick in there for your profit targets. You assign a stop loss, you get your entry, and you almost have to ride it out until you hit your profit target. And the reason why you do that is because you've got to make sure that your winning trades outweigh your losing trades. And the 920 crossover is all about catching moves. It's not about scalping key levels like I do or tick scalping like I do. It's not about that. It's about catching moves. So right now, I can look at this US 30 on a 5-minute chart, and I can tell you inherently this is risky. You're fighting in an intraday uptrend. We're up about 1%. The sort of the geopolitics point towards potentially a bullish type of a market setting, especially if there's a peace deal or a peace announcement that comes out of the NATO summit over in Europe. So inherently, we know this is risky, but our technicals tell us we can trade it. So from that perspective, no, I don't really get confused. I know exactly what I'm doing per each strategy, and I know what the game plan is going in. Do I personally trade things like 920s and 9 EMAs with real money? No, I don't. I'm a tick scalper. I trade Fibonacci's and key levels. That's what I do. And I give you guys a lot of content on that specific approach. But this stuff can work. You've just got to know how to do it. And I really think we've put a lot of content out, and I've spent a lot of hours explaining the ins and outs of how to be successful doing this. And, we've placed a lot of trades live that have come up aces for us and done fairly well. Sometimes we lose. Nothing's guaranteed. I mean, if you trade this, you're going to lose. But do you make more than you lose? The answer, probably, if you do it right, yeah. So there you go. All right, let me see. So I hope that helps, Urian. Let me see. Daniel, are you also using RSI divergence? I don't use RSI divergence. A lot of folks do. They love divergence. I don't get into it too much. I look for convergence of horizontal support and resistance levels. To me, that's always the bread and butter. But there's nothing wrong with RSI divergence if you're good at it. I think it's complex, so I have a hard time seeing the divergence myself in real time. Let me see, Daniel. Oh, man, the Fibonacci is gold. Yeah, I love the Fibonacci's. Those are we've won a lot of trades with Fibonacci's, a lot of them. So those are pretty good. The golden zone, the back end of the golden zone, Fibonacci golden zone. If you guys haven't seen that video, check that one out. I really like that one. Let me see, Eli, what are your thoughts on using an SMA instead of an EMA? I use an EMA. I use an EMA because the exponential moving average weights the more current price action. It places more emphasis on the price action that is more current. A simple moving average, I view that as being more of an investing tool, meaning a 50 crossing over the 200, the golden cross and the death cross for equities. Those are very, very important. But as far as an SMA, I don't particularly use the SMA. I use EMAs, exponential moving averages, because they weight the more current price action heavier. They give more emphasis on what's happening right now as opposed to what happened yesterday or yesteryear. But if you like the SMA, go with it. Let me see, Tardis, what strategy would you use on the SMH? I'm not sure what you mean by the SMH. I think you've asked me about the SMH before. Is it not sure what it is. The SMH. Sorry, I mean, just type in what's the SMH and I'll tell you. I'm sorry, I'm drawing a blank. It doesn't ring a bell off the top of my head. If it's a commodity, I typically what I would use an EMA. I would use what I use, Fibonacci counterpunch, which would be this strategy right here. And it's what we talked a little bit about yesterday, but it's a combination of Bollinger Bands, it's a combination of your 13-period EMA, and it's a combination of Fibonacci retracements. You'll notice that the crossover, see, the thing about crossover strategies is if you get into the longer time frames and you get a crossover, you're going to be in great shape. Like right there's your bid, and you can see you don't really cross under until we're right up here, so that's a big positive trade, but unfortunately, it took about 4 years to unravel. So you've got to dial this into maybe like a daily. But I love my 13-period EMA crossover with the Bollinger midpoint. I find that to be an incredibly attractive way to trade. Take a look at that. I mean, yeah, we get into a little weave right there, which means the market's flat and chaotic. But, boy, when we got that last crossover, 13 crossed underneath, I mean, that's just an absolutely huge move. And you get those. You get those. I'm not much of a crossover trader, though, to be honest with you. Let me see. Semiconductor. I would be using this. I would be using my basic framework, which is the Fibonacci Counterpunch. It's in the Trading Academy inside of How to Trade. Feel free to head on over and check that out. All right, I had one question, and then I'm going to go ahead and sign off. What do I think about Trump Powell? I think that Jerome Powell's fired. I think there's going to be an incredible amount of heat on him to cut interest rates in the very, very near term. They're not going to do it. They're not going to cut until September. In my view, you'll see Jerome Powell announce that he will not be seeking another term as Fed chair. Remember, his term's up in 2026 anyway. He's effectively fired right now. They're not going to nominate him again. Trump's not, and I don't think Congress will pass him or put him in control of the Fed again. So I think this is the end of Jay Powell. The question is he going to cut? Is he going to keep rates high? I've covered Jerome Powell for a lot of years, and it goes back to when he first got in. I remember I was working for another outlet and I was writing, and they had me on a live blog during the Fed announcements, and I would sit there and I would write down, all the key analysis and everything that he said, and would try to be, sort of coy and flippant about things. But I've been covering him for a long time, and I never thought that Jerome Powell was a political animal. I never saw him as being a political animal until last September when he cut interest rates by 0.5 point right before the election. And he also said that you were going to get 5 rate cuts in 2025. That's what the dot plot said. That's what the Fed said. They cut interest rates by 0.5 point before the election, the presidential election, and then promised 5 rate cuts for this year. What happened? They shouldn't have cut before the election. Inflation is entrenched. There was no good reason to cut interest rates before the election other than what? Try to get a bump out of the stock market and get the Democrat elected. That's why he did it. I lost all respect that day for Jerome Powell. I said, you're not supposed to be a political animal, Jay. You're supposed to be someone who's watching monetary policy, doing what's best for the people. That's your job. He didn't do that. I don't think they should cut interest rates now. Go to the grocery store. I got to go later today and see about getting some more protein. Go there and buy eggs and steak and chicken breast. I can't believe the price of chicken breast is through the roof. So Jerome Powell needs to go away. They need a changing of the guard. I think that he's going to announce his retirement from the Fed. I think he announces it this fall. Trump's going to be hard on him. There's calls from Congress to pull the Fed's charter. I don't know that will happen. I think that's pretty aggressive. But there's a lot of pressure on the Fed to cut now, to cut in July at the July meeting, to cut. They're not going to cut. He's not going to cut. Trump hates him. He wants low interest rates. Do low interest rates help us? Do they help the global economy? No, not really. They'll boost your markets. Your markets will go up and everybody will be happy. They'll go take out more debt on their credit cards and buy a new vehicle and maybe buy a house. But will it ever restore pricing stability like we saw before the COVID era? No. The truth of the matter is Jay Powell and the Fed, when they went unlimited quantitative easing and flooded the market with money to try to stave off a depression brought on by the global lockdowns, unlimited QE, it wrecked the global monetary system. I have yet to see it recover. Prices are exponentially higher on everything since COVID, and that's a direct product of what happened to the money supply. They put so many trillions into the global economy, cash, the prices are out of whack. There's no putting the rabbit back in the hat, guys. They made a bad mistake. And they can't get it back. They can't stop it. That's why do you think gold's up around 3,300? Gold's a direct inflation hedge. All your agricultural commodities. This is a tough period. I'm not going to sit here and say things are great because they're not. Financially, this is a challenge. I don't know if we, as a global community, if we can work out of this. I think it's not really a depression or a recession, but it really is a situation where people are making more money than they ever have, and it's just not going near as far. And that's the reality of it. So It's the old thing, guys. The rich get rich, and retail traders like us fight our tails off to make a few bucks every day. But we have to. It's our job. That's what we do. All right, guys, I'm going to go ahead and sign off here. I've rambled on long enough about policy, but I hope that answered your question about Trump and Powell. Powell's gone. I made the prediction a few months ago. He's gone. We'll wait and see, but I think it's going to come at that September meeting. He's going to announce that he won't be back. All right, guys, I'm going to go ahead and sign off here for a few hours. Keep an eye on the news feed. I want to thank everybody for joining me. Let's go ahead. We'll take one more look because I have run long here. This crossover is just not going to set up. You're right there. You're waiting for the 9 to cross under the 20, and then you're going to sell. Give me this gold trade. Gold looks like you potentially are getting a bottom in here. We just got to wait and see exactly how it develops. I love my job. Absolutely, Eli. I am quite fond of mine as well. Could be a little bit better. Could be a little bit worse, though. It can always be worse. I've done a lot of jobs in this life. Blue-collar background. Worked in the oil fields. Worked construction. I like trading better. I like trading better. That's for sure. All right, guys. Absolutely, Daniel. You're welcome. All right, I'm going to go ahead and sign off. You're absolutely welcome, Lita. Thanks for joining. Okay, guys, I'm going to go ahead. We're going to check you tomorrow. We're going to be back with the Switch Markets Live. I won't be on this channel. We'll be over at the Switch Markets channel or at howtotrade.com. Feel free to pop by if you want to check out the live stream. We're going to be all about Jay Powell, and we're going to talk more monetary policy. You're welcome, Tuku. Absolutely. All right, guys, I'm out. Have a fantastic session. We'll be on the Switch Markets Live circuit tomorrow. Be sure to tune in. Till then, trade the action well, and we'll talk soon. See ya.